Hey traders, happy Friday. Welcome back to the final hour. It is 3 p.m. We had a bit of a sell-off today, which is totally fine. I got some hedges working out pretty nicely that I'll keep an eye on. I didn't close them. I'm looking to see if they're going to help. They're there to serve a purpose. So let's take a look at everything. Here is a little hedge going on. So I have a 6025 long put on micro E-mini futures. That's up about $400 right now. Let's go back to the symbol. There we go. So this one here, I have a 6,000 long put that's up $100. I've got a 6025 long put that's up $400. I've got a 21,200 on micro and Nasdaq that's up $622. And I do have some down hedges as well. I'm not like fully flush on these hedges, but a few of them are serving the purpose. So those are in profit, and I'm looking to see if they will remain in profit and possibly even offer up more profit. Because if we take a look at this move, I was looking at this little yellow box for potential, backfill and gap fill on the election. So right now we're trading right in between a couple of big spots. Coming into this week, we had some indecision for the first few days. We have a large gap right here that the market may be interested in finding. We tap the top of that today. We go into the gap overnight from Thursday to today. There's a gap right there. Okay, we still had this gap all the way down here. That would technically be my FOMC gap. If the market comes down to fill it, that is definitely an election rally that is ending. A lot of good stuff getting priced in. The Fed, may pause for December. I don't think that's what the market's going to like to hear, but it's going to be interesting. So I did add a couple of trades today. Overall, let me just go through my income for the week. So let's see here. Daily profit play was 6 for 7 for some net profit for the week. That's good. I rattled off a bunch of trades on the SPY this week and the Qs. I had one win. Let's go 1, 2, 3, 4, 5, 6 wins on the SPY and Qs and 2 losses. I took a loss on Alibaba and Baidu for 2 credit spreads. I was actually assigned some of the shares, but I changed everything up to a last in, first out, so I dumped those. I still have some shares of both. I'm still working through those a little bit. And then SoFi is getting called away for profit. I did some rolls this week. I rolled out Amazon a little bit further, and Amazon actually had a big drop today, which is kind of fine. I mean, that's a decent pullback. I'm just going to wait and see if this will continue to pull back. So I may add in another long put for the end of the year. But if the IV continues to go up in Amazon, I'm probably just going to add more exposure into here for some dollar cost averaging levels. I think Amazon is still, to me, one of my favorite stocks to have and own and sit in, dollar cost average into. And when I have the opportunity, I will play lots of options on that. Let's go to Tesla. Tesla had a pretty rough week. So it surged all the way up here towards the 11th, which was Monday, which was another big gap from Friday to Monday, and then it faded all week. So Tuesday, Wednesday, Thursday, from the Monday high all the way back down to today's candle. I mean, that's almost a $50 move in Tesla. That's substantial. But I'd almost like to see a little bit more, if possible, high, low, lower, low. Maybe come back into the, let's say, 280 to 270 zone. If we have a gap fill, then I'll start looking at some more involvement in Tesla. I do have some option trades that are, debit spreads, credit spreads, ratio spreads, 1-1-1s. I've got a handful of things there on Tesla trying to make a few bucks. And honestly, maybe never even owning the shares. So here's what I have. All right, let's go to Tesla. Intel. Okay, I'm looking to get that called away for a couple $100 at 24. That's 2 weeks out. Let's see, AT&T. I set some covered calls on AT&T, looking to peel off about $1,200 to $1,300 per account. Not doing anything in Chewy. I've got another ownership piece there. Tesla is right here. So I have a 270 by 265 bull put spread, which is $40, $50 clear of my levels. That's okay. I have a 255 by 250. That is a bull call spread, almost $70 clear of that level. 230 by 235 bull put spread, almost $100 clear. So likely those will be, out of the money credit spreads that expire. I have the in the money bull call spread that I paid. Looks like 65. So I paid like $2.25. So that means I've got a profit potential of 275. And is this closing close to 5? No, it's at 417. I will consider closing this if my credit is showing 450 to 460. I'm looking at like an 80 to 90% profit versus waiting all the way to January. And then I have the 230 by 220, or the 230 by 225 is actually a ratio spread, and the 130 by 115 is also a ratio spread. So, net up some profit, need some time decay, and should be fine. I mean, Tesla as a whole has been pretty good. All right, so we got that going on. Let's see here. Had a fun session today in Daily Profit Play. We talked about a couple of different mechanics to our strategy. I actually just watched a video from Tasty on this, which I thought was interesting. So they talked about doing some 0DT trading at the open or around 11 a.m. Eastern time, 1 p.m. Eastern time, and 2:30 p.m. Eastern time. They had some pretty high deltas though. I mean, a 20 delta, 30 delta, 40 delta. Obviously a 40 delta, you're going to get a lot of premium for it. But what they don't show, and I can test this, and this is something that I can talk more about in my Daily Profit Play. But basically, they said they're going to go after a 25% take profit, and they're going to let the entire thing expire. So, traders that are in my Daily Profit Play know what that means. If you're letting it expire, then there's partial winners, partial losers, full losses. You want to make sure you have some type of risk-defined trade in there. But thought it was interesting. They collect data. They do all these studies. They throw them out there on the Tasty Live network. So I just like to consume that stuff. Do you think the DXY will drop to close the gap? Not anytime soon. Not anytime soon. That's a long ways away, Sarah. I would say getting filled at 103.44 for that trade on the DXY is likely going to come after either this level gets hit, okay, and then we head lower, or honestly, this level gets hit and then it comes lower. Right now, and I said this in an earlier session, it's November 15th. I'm not looking for tops and bottoms. Even in the equities market right now, even if we have a bit of a correction, I don't know if the correction necessarily justifies a top in the market or if the correction just pulls back and then we have some sideways range that get us into the end of the year with no clear direction. But I don't see, the Forex market especially, it's rare that you see tops and bottoms in, November, December. The only one that I would look at for maybe having some type of top would be the Bank of Japan, Japanese yen, if there is. And somebody posted this in my Discord earlier today. Maybe they posted it in the Forex channel. So right here, somebody posted this in my Discord this morning. We're looking at about a just over a 50% chance that the BOJ would be raising rates in December. And I would imagine if they do that, we might have another round of unraveling in the Japanese yen. We might see some risk-off trading. It might be a volatility event at this time because we have December 18th Fed. I would imagine right around that same week is going to be a BOJ. They're really crafty with how they, have this like a 5-hour window of like economic projections and monetary policy report, but nobody knows when it actually happens or what they actually do. But price during that time can move a lot. So if something were to happen to really disrupt this kind of holiday direction, I would not put it past the BOJ to do something a little crazy, especially if the Fed changes course. If the Fed pauses, and there's the watch tool right here. If the Fed pauses in December, we're coming into this at 58 to 41. Let's just say that we're idling around this like 50-50 zone. Give me 1 second. Okay. So if we're idling 50-50 as we head into the December 18th rate decision, look, it's and how many times have we said it and sweated it out this entire year with gotta wait for the Fed. Let's see what the Fed's gonna do. Here's where the Fed's at. Here's what the probability says. This tool has been correct going into the Fed since 2009. So this will go up and it will go down and it will go up and it will go down and there'll be all sorts of nonsense going back and forth. But it's all going to be about the day of or the day before to see where this thing is at. Going to be the higher probability. I mean, if you remember, we had a 50 basis points cut projected in September, and it wasn't by a big margin. It was like 55% that they'd cut, and they did. So, I mean, I would take this. I mean, this thing has not been wrong since 2009. So, obviously, it's not wrong because they change it so dramatically right up until the Fed rate decision at 2 p.m. on that Wednesday. You know, so anyway, it is going to be about the Fed. And I said this early in the week. We did a marathon here for A1 trading. That was a long marathon, like 7.5 hour stream. I was on for 2 of those segments, and I think that if you think about the Fed, it is one real scenario of derailing this election rally, right? I mean, sitting up here at what has been a pretty darn good year. I don't think we can take anything away from the market going back into January. Let's see where we're at. So we've obviously given back. I think we shaved off about 2% this week, mostly from today's price action. So the market's down about 2.33% to 2.5%. I believe the Nasdaq is down a little bit sharper than that. That's like a 4% drop from the highs. Nasdaq about 3.72. It was just around 4% from the highs and the Qs. MES versus MNQ. MNQ had a pretty decent top to bottom. This one I think is over 4%. We went to 4.15, almost to 4.3% from top to bottom, just in the last few days of trading. Okay. But this is my outlook. Okay. I think there's still a lot of support in here to buy the dip. My only concern is that I don't necessarily want to be buying the dip without having pullbacks. I'll participate, but I could see us coming back to this 100. This would be the 50. This would be the 100. This would be the 144. This is the 200. Now, a 200 dip would be pretty quiet, or I'm sorry, pretty violent. So, if we pull back a little bit deeper, I'll probably take some profits on my hedges, add in a little bit more for some small risk-defined trades, and I'll add in a little bit on each level. I'll go out longer if needed. I'll play the time game here. But I could see this market after being a gangbusters kind of really, it's been Q4 of 2022 into 2023 into 2024. This market has not had much of a pullback since that Q4 of 2022, which is right here. Okay. This is Q4 2022 in here, right? We had our little hiccup in late 2023, but 2024 has been the return of the bull market, little dip, little dip. Yeah. I mean, where are we going? Well, we can go all the way back there for any type of past resistance. We can come all the way down here to this dynamic level. What we haven't seen is, what about Phil? We had profit on daily profit play within a few minutes. I can take a look at my trade here. Daily profit play this morning. Got in at 9:35, was closed out for profit at 9:54. So trade took 15 minutes. Okay. So we have seen trend. Okay. What we haven't seen a lot of is this. I don't think a lot of traders are ready for sideways. And I'm not saying this has to happen because clearly booms and busts have been happening since 2018. but a sideways period where this market is still decent, there's resiliency, there's economic growth. It may not be as fast, might not be as turbulent, it might not be as awesome and exponential, but it could be steady. And if we have steady growth, maybe it's not justifying all-time highs, so there might be a bit of a correction, but could we live and exist in this area that we can still make some trader money? And I would be really interested to see, like, if I'm able to get some lows in here. Okay, now, yes, we could be watching this floor carefully, but also if the floor breaks, okay, is that a bear trap or is that the real thing? If the ceiling breaks, is it justified? I don't know. But the historical average of the price to earnings ratio for the S&P 500 is around 17 to 18, and we're at like 24 or 25 right now. So it's getting up there. Okay, it's getting up there. And all I'm saying is I could see a pullback. I think we may have to be comfortable with anywhere between 5 to 10% pullbacks, even though price doesn't necessarily turn full on bearish. I could see a 5 to 10% pullback happening. So if it doesn't, that's fine. If it does, I want to be hedged and prepared. Okay? Because we have support and support and support, and we got away from that. So I could see another test of some of these dynamic levels offering some type of stability, some type of support, and then the market finds a way to get back up to these highs, but maybe struggles to get to all-time highs. Does that make sense? So just throwing it out there as a scenario where all of a sudden this, all-time high, all-time high, all-time high, this thing can't be stopped. If that doesn't happen, a lot of traders are going to get bored with this market. Okay, I should say a lot of, YOLO investors. But as a trader, there's good opportunities in here to trade and also dollar cost average and also invest and also be prepared to, brace the downside if needed. But at the end of the day, I'm a trader. So I will assess the structure and I'll see what it gives us and I'll see if there's opportunities to take it. But like I said, I would expect be comfortable with a potential 5 to 10% correction zone that could happen quickly. When we saw this drop in August, that was a Friday to Monday open, and this market, now I understand that the Japanese yen had a part of that, and there was deleveraging and all sorts of stuff, but that was 8% in 3 trading days. Okay? So if that were to happen again, some type of vol event again, I want to be prepared for that. So I mentioned this a couple times in some of my sessions. One thing that's really, I think I answered this actually in that long webinar I did with Nick on Tuesday and a couple times during the live sessions. But how can you hedge? How can you hedge? So my favorite ways to hedge right now is I will buy way out of the money puts on SPY and QQQ. I usually take those about 30 to 45 days to expiration. So I'll just put DT for expiration. And I'm usually trying to pay 10 to 20 cents debit, like dirt freaking cheap. Okay. Because if I put on, let's say $100 of that, just as an example, usually when I'm hedging, I might put on usually I'm comfortable with like a $250 to $500 hedge that has a potential to pay, several $1,000s. So if I put on a debit of $100, there is a potential in some type of crazy vol event, we could see this paying, 3 to 5K in profit. Like that's not exaggeration. If you calculate it based on a 1 delta and you have let's say a 10% move in the underlying asset and it does it in such a short amount of time, the gamma, and that gamma is the acceleration of those option prices, that can swell so quickly that a little 10-cent debit can turn into $1 or $2 or $3. Okay. So it's a bit of a black swan hedge, but if the market does it fast enough with like a 5 to 10% move within a couple of days, those option prices can change to be favorable, even though you're way out of the money. So that's one way to do it. That's pretty cost effective. I also buy puts on MES and MNQ. So those are micro futures. Okay. And again, those are dollar amounts typically, so like $200 to $500 with no profit cap. Okay. So if it goes my way, I can turn a couple $100 into a few $1,000s, and that helps, offset some of the drawdown. That helps me gain a little profit on any type of downturn, and that's fine. Also, not just hedging the indexes, but you can also, hedge your portfolio. I also buy puts or create a collar trade on my own shares. So that means I sell a call above own price and I buy a put below own price. It's basically a free hedge because I try to finance the long put with a covered call. And if price goes down, I can have some profit on the put side. If price goes up, maybe it gets called away and I still make net on the return and I just reestablish that position. So has that ever happened? Yeah, it happened here. I mean, I had a big hedge payout in August. That was a big hedge payout. I had expirations out to the end of August, and also had them into the middle of end of September, and those were like 30 to 60 day hedges. And yeah, those paid out really nicely. I was closing them out as Monday's candle started to rip higher. I was closing a lot of those out for profit. I also had some 111s, and those were strategies where I buy a put and then I sell a put. So I buy a put, sell a put, and then I sell a put down here, and this is a profit trap. And so the trade looks something like this. So there's my risk. So if I'm losing money, it's down here, and I have a tail credit that pays me, and then I have a profit trap that pays me. So I did quite a few of those trades over the summertime that were nice little income trades, and then it was a really nasty move in August. But those hedges did pay out like almost 2,000+%. So do I play it knowing that I'm going to make money on these trades? No. That's the only downside. And I just said it's a necessary evil. For me, managing capital, I have to make sure that I have some play to the downside just in case the market does something silly. Because there's too many times where this market does the same thing and it just melts up and it melts up and it melts up and it drifts up and it drifts up, and it's the easiest game in the world. Just be long, just be investing, stay in the game, dollar cost average, ride it out, hold it, and all of a sudden we have a 10% haircut, or 5% haircut. So when that happens, it's, yeah, it might be 1 out of 12 trades. If I do it every month, 1 out of 12 trades pays, but if it pays for all my hedges and offsets, any type of drawdown by maybe 3 to 5%, that helps. That keeps my bottom line a little bit tighter, and that's the name of the game. So it's not for everybody. I know some people. I mean, I get frustrated. I feel like sometimes I over hedge, and I definitely did that in August. Like once I got paid out here, I was hedged again, thinking, okay, well, if we flush down another 5 or 10%, I want to make sure that I'm covered, and so that was an expensive hedge. So it was, could have been better, but at the same time, it wasn't that long. Like by the time we got back to this area, my portfolio was already at all-time highs. Okay. And then once we were over here and we were back to these highs, my portfolio was at all-time highs. And so even though basically I've had fresh highs every time, and the market doesn't even have to get to those levels. So that's been a good thing, is the way that I did play out some of the hedges this year, that I've been able to kind of cushion the blow, and also see price has been pretty resilient to get back to fresh highs again. Okay. Harmonics, higher time frames, I love them. Daily, weekly, 8-hour, I think they're fine. Do they give you an exact top and bottom? No. So you got to be pretty cautious or careful on where you're getting in, how you're getting in. I prefer the bigger time frame harmonics because they give you more to work with. So as an example, Sarah, give me an example. Give me a chart, give me a harmonic that you have right now. And I'll do my best to kind of draw a harmonic, because I'm pretty sure I could spot one if there's one of the common patterns. A lot of currency harmonics work out. In Forex, you get some good harmonic patterns. It's all based on Fibonacci ratios and stuff. But what I typically trade is the merge. So it looks something like this. Let's say we have the market that flushed lower, and then it goes up like this. That's usually a pretty good harmonic pattern. Okay, so you have this, and this is an easy way to study it. So you have X, you have an A, you have a B, you have a C, and you have a D. Okay, so what a harmonic pattern will do is it will calculate that there are entry levels in here. Okay, let me change this color. Okay, it'll calculate entry levels in here, and it will project, that there's profit levels to be had, somewhere about this C to D. You go into like a fib zone of this C to D. You go into the bottom of this. My favorite spot, I'm just going to put a big green dot on it. My favorite spot to trade if I have an X, A, B, C, D would be to look for entries up here in this D zone, okay, and then take profit at the merge. This area right in here is where I take my profit most of the time. I'm pretty conservative on them, but when you're on a daily or weekly pattern, that could offer up hundreds and hundreds of pips. And to me, that's a little bit easier to spot the trend, confirm it on a lower time frame, trade that direction, and then go after a nice technical level. So if you're asking me how to trade a harmonic or a harmonic, that's what I typically look at. Weekly, so euro dollar weekly. Euro dollar weekly. All right. And then tell me if I'm right or wrong. Is it this? X, A, B, C, D? Is it something like that? Or is it shorter term? Or is it X, A, B, C, D? And again, it's not perfect. I mean, I could see that in there. I could see this X, A, B, C, D, calling for that to be a harmonic level, and you're starting to level in here, and then you want to take it back up to that area. So if you want to throw a screenshot on my Discord, I'll take a look at it. But bottom line is, it's going to be on the final swing, so it's going to be this high to this low, or a low to a high. It's going to be that swing, and it's going to be based on some Fibonacci targets in here. All I'm saying from my personal experience is I like the higher time frames. Okay, I like the higher time frames simply because you get more distance to work with. You get more space to work with. Okay. All right. So it was this second one? Did I get this one correct? Okay, Eli Lilly. Yeah, I mean, just be patient on some of this stuff. Eli Lilly has been a nonstop bullet to the upside. It's like it should freaking pull back. I hope that it does. I don't know if RFK coming in to shake up healthcare is going to be good for anything pharma. Eli Lilly making Ozempic, and it's supposed to help people lose weight. It's supposed to help with alcoholism. It's supposed to help with. It's the new injected wonder drug. So it's been a great run. I just look at the technicals. I'm just going to wait. I mean, if we look at fundamentals for a second, let's go to Simply Wall Street. Let's go to LLY. I mean, I'm happy that it's fallen just because it seems like it's normal now. We have earnings are growing, earnings forecasted to grow, trading below estimated value. That's the good thing, is there's some room to run. Now, the PE and price to sales, PE ratio is a little bit steep. Let's make sure that's not above its peers. But, fair value calling for over $1,000 stock. I mean, yeah, I would gladly dollar cost average into it, but we've got a peer average at 28. Pfizer, Johnson & Johnson, Merck, those are way cheaper price to earnings than Eli Lilly is. But does that mean it's overvalued? Not necessarily. I just think that now that we've taken out 21 and 50, either this is going to go sideways. There's some decent support in here, but look, I wouldn't be opposed to, if I buy Eli Lilly now, I would put $1,000 on it. Okay. And here's why. I would start small. I wouldn't do a lot of option stuff on it. I do have this trade in here. This is kind of wild. I've got a 700 by 690 bear put spread. Hang on a second. Did I take that trade? I may have, that might have been a trade that I already took and lost, but let me see. I don't see any LLY exposure. Let me double check. There we go. So I have yes. So I have the 111. Okay. So right now I have a 700 by 690. That is a bear put spread. And then I have a 600, which is my sell put. So it's exposed to that sell put. It's out to January. If price were to fall all the way down to $600, I would potentially take assignment. Okay. Now, if I were to start dollar cost averaging, let's say that I buy $1,000 worth of Eli Lilly right now. Okay, so I spend $1,000. It has nothing to do with buying shares. It doesn't have anything to do with controlling options. But if I buy $1,000 and this stock plummets 300% or 30% of the downside, my $1,000 is still worth $700. Now, I'm down 30%, but can I stomach a $300 drawdown? Absolutely. Because what I would do is I would take $1,000 here, and then I would take $1,000 here, and so I'd have $2,000 invested. And if this came back up in any way, shape, or form to these highs, I'd have a gain of roughly that, and that gain would be on a $2,000 investment. And I can turn, a $300 drawdown into potentially a $1,000 profit because I bought in, let it draw against me, bought in again. Both of those end up paying for profit, going to the tops, and I make 50% return on capital on my break-even position. I'm in for $2,000. I make $1,000. So my $300 drawdown is tiny compared to the 50+% upside that I get if I dollar cost average a couple of times. Make sense? All right. So, Maddie, were you referring? Yeah. So I'm still in the trade. I mean, the likelihood of assignment. Let me check what the deltas are on Eli Lilly. So going out to January, that delta is a 7 delta. So that means we have a 7% chance of assignment. It's pretty low. Okay. Now, could I take some shares of this and the answer is yes. If I took some shares, could I afford to do it? Yes. I've got almost $1.1 million of buy power. So yes, I could take some shares. I could repair it, which is what I intend to do. The trades that I'm in for that 111 is they're on my portfolio margin accounts, and so it doesn't tie up as much buying power on the stock buying side. Okay. So about a 7% chance of assignment. I'm still going to take that trade. My bear put spread is at the near end of the January 17th expiration. Okay. Now, what I'm going to look for here is, and think about this. I mean, I could throw $1,000 at it, right? But it has been so volatile. I mean, what's our pullback right now? If we go from the highs, we've pulled back about 23% right now. Let me just see if there's any type of wave structure here. This is what's the hard part is like there isn't. I mean, this has just been nothing but gangbusters. So my concern is that we end up taking, and this is a long ways off, but what happens if we do something like this? What happens if with this major low and this major high, if we pull back into, let's say, the 30 to 38 to 50% area? Well, then there's a chance that I look at this stock at $500, okay? And at $500, I will try to do my best to lower the cost basis. I'll do my best to try to own the shares, try to flip this thing for $5 or $10, make a couple bucks on it. Okay, but I'm just looking at where could this go? Well, if it goes high, low, lower high, lower low, sure, I'll consider it. But if I could own this thing around $600, I said, yeah, we come back and we wipe away a lot of these kind of capitulation upside moves. But I wouldn't mind just throwing a couple of dollars at it. Like to risk $1,000. I mean, unless this company's going out of business, unless Ozempic's all of a sudden not going to be a thing anymore. I guess the difference is, will there be alternatives? Will there be more competition? That makes sense? Okay. So do I think it's going down? Well, I mean, in a way, I hope it doesn't, because here's a little income trade that if it doesn't go and get assigned, I still make about $200 on the trade. We're below the daily 200 EMA. I suppose this would be more of a threat if price is going lower. And this 50 period, which has been this guy, so 50 period is out here. If the 50 period crosses over the 200, then I'll be watching a little bit more carefully. Okay. But on the weekly chart, we're just breaking through that 21 and 50. So I'll keep an eye on it. That's it. I've got a big Fibonacci swing from these big lows all the way to the highs, and I'll see if there's some larger area that it settles into. And that's it. And the way I'd manage this trade is if you don't intend to own, which is what I put in this trade alert, I do intend to take some shares. If I have to, I will take some shares. If you don't want to own that, then you better roll that put out. Okay, you want to roll that put out and try to give yourself more time. You can keep the same strike. You can roll it out further in time, and hopefully continue to roll it out for a credit and just kind of keep kicking it down the road. But to do that, you have to maintain some buying power. Okay. All right. So that's a little Eli Lilly. Dollar CAD is good. Dollar CAD is up to 4,100. This thing is screaming. And look, I mean, I'm probably conservative on this profit target because realistically, why wouldn't this thing just come up to these highs? Right? Couldn't we just find those highs? So, I mean, I could see this going to like 145.50 or 146, and I'm calling a target move around like 144.50. I can move these up. I think I should probably move this up to like 44.50 or 4,500. But for right now, I mean, I'm filled on two positions going higher. I'm stacking up here. So I think this is a pretty convincing move that there's probably been some retail traders stuck on the wrong side of this move. And with this type of breakout, I just look left and I see these stand out, kind of twin peaks, if you will. And so any type of pullback here, I'm looking to get long and stay long. If you got a favorite trend system, I would be looking to buy some dips on that dollar CAD. So you can take this down to a 1 hour time frame. And if we get some pullbacks in here, I would just stay with this trend. See how much wider these moving averages are getting? So it just started to kind of slowly make its way like higher high, higher high, higher high. Then we started to really widen out where we're getting more space between my moving averages. That's a strong trend that's growing, right? So Sarah, I'm glad you closed it out because I know that you were upside down. Now I think this is a flipperoo to the other side. So I think this thing looks really good to the upside. I'm long. I'm going to hold this thing towards 44 to 4,500. Okay. And yeah, you can go buy only on that. Yep. Okay. So that's dollar CAD. I want to also look at my dollar Swiss. Dollar Swiss is still looking pretty good. I'm long on this one, and my bigger profit goal on my Tasty FX platform is 92. So I have about 25 open positions on this one, going after 92. So when that's all said and done, there's going to be a lot of pips, a lot of profit. That's an old service, but if anybody was with me from my market traders days, that was a portfolio builder trade that we built into a lot. And if we get to 92, then I will be announcing that, that's where I'm taking profit. So should be easy. Camila, I mean, you can contact support at Prosperity Pub. That's the best email to ask. Just send an email in and ask them about. There's gold, there's platinum, there's VIPs, there's all sorts of funny names for it, but you can ask. Okay. With CAD Swiss, do you think short pullback? What direction do you want to see? Okay. I'm long for positive carry. I just, and I'll make this really clear, like the way that I trade Forex is usually not very short term. If I get a swing trade, I'm usually still going after 100 to 300 pips. So I don't look at little oscillations in my trades. I'm trading some big spaces and some wide open spaces because I have a lot more wiggle room to kind of level myself into these areas. I give time a chance to work. I give structure a chance to work. I let the bear and bull traps play out. I think the hardest thing about Forex trading is when you're trying to, get long, and all of a sudden it's like, well, I got long right here and I put a stop loss right below that. And then price goes boop, boop, and just keeps testing that level. And all these people get stopped out, but the price still ends up going your way. So, I mean, a pullback is fine. I mean, a pullback would be maybe range bounded here. Maybe it pulls back and we have another opportunity to buy and buy and buy, but just watch these lows. I'm still targeting this level, and that's conservative. I mean, on the CAD Swiss bigger picture now, I don't know if this is more the Swiss franc, probably more the Swiss franc, because oil's on the verge of, maybe not looking too hot to the upside. So if oil drops, that's going to hurt the CAD a little bit. Plus, commodities getting beat up a lot by this dollar strength. But this is where I want to take the CAD Swiss longer term. So it's not ready yet, but at some point when this thing gets into the clear, I could see this being a bottom. This comes up here, tests the highs, pulls back again, sets up a beautiful head and shoulders pattern. And then we looked at dollar cost averaging again and then trade a symmetry target all the way back to this big old pocket. So I could turn this trade into what is now, been, 6 months of holding, 9 months of holding, maybe longer. I could turn this into a 2-year campaign, but I could make tens of thousands of pips on this thing. I just have to stay committed, And the nice thing is right now it's positive swap, so I'm actually getting paid to hold the position, and I'm okay with that. So, could that change? Sure. Could the BOC cut rates more? Sure. Could the Swiss National Bank raise rates? Sure. But until they do, I'm going to sit here and enjoy some positive swap. But I trade bigger time frames, open spaces, and I give myself a lot more freedom to let the market be noisy and be choppy, because the days of, the days of 200 pips a day are gone. The Forex market is so big and so liquid and it's so efficient. I mean, it's rare. It's so rare that you get currency pairs to move. I mean, you get like maybe the pound New Zealand just peak up there towards like 150 pips on the day or 200 pips on the day, maybe the pound yen. But then something weird has to happen, like a big risk-off event or a big disruption in the market. Then you get a big 200-300 candle day. And that was all year last. The last 2 years, Japanese yen's done that for 2 years straight. One day out of like 100 days, it'll have like a 500 pip mover. It's super, super noisy and disruptive, right? So all I'm saying is I try to avoid that stuff. I try to trade on time frames that are big enough that the market can test all these little nuanced highs and lows and stop out all those little scalpers and stop out those little breakout traders. It's not me. I'm just trying to stay out of the way, And honestly, I trade more in Forex without stop losses because I just trade so small that I'm going to dollar cost average into it anyway. So example, dollar CAD. If I were to take a loss on the dollar CAD, I'd probably lose less than 1% of my account. Okay. But if that 1% of my account that I'm adding, and this becomes a 1.5 or 1.25 or even 2% account that goes my way, if I get stopped out, yeah, I might be risking 1% here in a couple of trades. But if I win, I'm probably winning closer to 2 to 3% by stacking my winners, So it's again, it's a bit of a nuanced trade. It's something that a lot of traders don't wrap their head around very well, because they want, like, Chris, I want a stop loss. I want to take profit. Well, look, I'll stop out here, but I'm pretty determined just to take this thing up to 44.50 to 4,500 because I think it's going there, and I'll give it time. And so any pullbacks and dips, it's like, well, how committed am I? I'm pretty committed at this point. When we've had a nice fierce breakout by 100 pips, it's cleared out all these levels. It's cleared out multi-year highs. So to me, this thing is breaking this ceiling, and the next level is a measured move. So even conservatively, I would say take this measured move, go 50% of that, go 100% of that, and those are targets 1 and 2. That's a really simple way to measure this move. If you want to be crazy aggressive and crazy leveraged in here, then take it to a more conservative profit target. But I think we go up to that level, and we had those 2 highs years ago that are sitting here between 45 and 46, which I also think the market finds them. So again, doesn't have to be hard. Yep. So yeah, let's see what happens. But could be a good trade. Look, it's looking good. Looking left, it looks even better. Breaking out here above 140, looking even better. So that's why I'm long. All right. Anything else for today? Any other charts? Anything else? How to do this week? Papa John, you survived the week. As dollar cap moved due to U.S. dollar strength, oil prices, mostly U.S. dollar strength. I mean, oil has not been a good performer either. Oil's just been beat up so badly, right? It's not breaking lows or anything. It's still like $68, $67, but commodities in general are down. Dollar strong, commodities down, gold's down, silver's down. Commodity-based currencies like your Aussie, like your New Zealand, like your CAD, they're getting beat up pretty heavily by the dollar. So that's probably where I see most of this happening. We've had a huge move on the dollar, right? And on top of that, now that the dollar is gaining more strength post-election, it's running on those commodities, and the commodity-based pairs are also reflecting that. Okay. All right. Based on your measure moves, where do you think PLTR? I don't know, man. PLTR is just like, I mean, honestly, it's like I'm just asking for a pullback. This thing is stupid now. So this is another stock that I wish I had. I wanted to own it. I've done a lot of options in here to generate some income. I couldn't add enough exposure in here. But at this point, I'm like, well, maybe it comes back to reality. Maybe it doesn't. So all I'm looking at on Palantir is a pullback. I like the stock. I would say right now in open space, it's like, why can't it be a $100 stock? I think Palantir already blew through the expected move based on its fair value. So we're trading at a very high price to earnings. Current price is 60 with fair value at 40. So honestly, for me, I'm just going to wait. I'd love to see pullbacks. We may or may not get them, but I'm not going to sit here and chase this thing at highs when this thing is likely going to come back $10, $15, $20. So if it goes up to 90 to 100, congratulations, you're killing it. But I'm not chasing this thing. I'll have all my little income trades down here, make me a few bucks without ever owning the shares, and I'll wait for a better opportunity. Okay. CHPT, is that charge point? $0. This is the one thing that I would say is the worst plan moving forward would be seeing something like this that looks like it's so cheap. You're right. It is cheap. But this is on the verge of bankruptcy. Like, there's no way this is a sustainable move for this stock to be down 99% and think this is a good stock. I don't care how cheap it is. Okay? I don't know why this stock sucks so bad. And I'm not going to throw any money at it thinking that I'm going to be right. If I did, I would buy, 100 shares and see if it goes up to maybe $5. Your stop loss is 0, meaning the stock goes worthless. Okay? Or there's bankruptcy, or it gets restructured, whatever, files Chapter 11, or it gets bought out. The one thing we haven't seen much of is a lot of merger and acquisition action, and that's a whole new component to the stock market, right? It's like we have these big runs. To sustain these runs, we have stock buybacks. To sustain these sectors and these cycles, we have mergers and acquisitions. So charge point to me is, okay, I don't see Trump being as friendly to electric vehicles. And I mean, I say that, and it's like Tesla's been ripping like crazy, but Tesla is more than just a car company. I mean, I think Tesla it's an energy company, and they're going to have humanoids working for their entire company, and they'll have zero overhead essentially. But a stock like this that's 97%, it's like, what do you do with it? You can throw some money at it and hope it does something. Otherwise, I think it's wasted capital. Yep, I think it's dead capital. So I'm not going to chase it. I don't care. It tried to survive here once we had this is either a SPAC play or an IPO back in 2019. I would imagine it was a SPAC play because that was like the sexiest thing back in 2019 to 2020. And it tried to survive that, right? We came back around like $8 or $9. We bounced there pretty hard a couple times, but once it broke that floor, it's worthless. So I've got no advice for you on that one unless you're willing to risk everything you throw at it, because it's either going to 0, it's going to get bought out by somebody else, but that's a hard one to trade. That's a lot of uncertainty. Okay. Same thing on yep. So anything in the EV space, anything that is 99% down, I have nothing good to say about it. It's down that much for a reason. Okay. When you look at this year and we've had 50 all-time highs in the stock market and we've had crazy rips and triple digit gains by a lot of stocks this year, what makes a $1 stock attractive? Absolutely nothing. So I'm not going to throw money at it. Okay. And I say that because I've got a friend that made a good living being a penny stock trader that lost millions of dollars when just some of his positions got delisted. Nothing he could do to control it, just like they're just no longer tradable. And he had thousands upon thousands. He had hundreds and hundreds of bets out there. Okay, like if this went up, it'd pay. I mean, they paid ridiculous. He had like $10,000 positions that would be up $500,000. But that's 1 in 1,000 that do that. But it pays for everything. And the problem was he had all these bets, and all of them just started like disappearing, delisting, pink sheets, gray sheets, gone. So I'm not saying ChargePoint is one of those, but there's a reason it's down 99% or 97%. I just can't fundamentally wrap my head around why it'd be a good stock. Okay. JPY ripping back up. Is it doing what? Classic. So that's all today. Yeah. I mean, it's just, what do you do with that? It is the most random, unpredictable currency. I have no idea why. Who cares? I mean, give me a reason why the Japanese yen's moving. Fell more than 1%. AI's level. Anything here on JPY? Continues retracement down 200 pips. Anything? Is it tough talk from the Fed? Tough talk from the finance minister today. Okay, so it's coming out of Japan. Heavy selling. Pairs now down 200 pips. Yep. So go figure. Just like catching water. Okay. And what does this mean? Probably nothing. I mean, seriously, this thing has been in an uptrend. So I wouldn't be surprised if it's just a nasty pullback and then it starts bid and it goes back up to higher highs, higher highs, higher highs, higher highs. Then we start talking intervention again. We see how noisy that gets. We see if there's more intervention coming in. Don't fudge with it. I'm not going to trade it. Okay. So anytime you ask me about the Japanese yen, I'll look at it mostly in awe. Not really something I like trading. All right. Let's wrap it up there. There you go. I mean, that's fine. If you're a trend follower there, Sarah, it's great. I mean, I've said for years, like, I hate the Japanese yen because it's a fundamental currency pair, not necessarily a technical currency pair. But when you have some flows and trends, I mean, I saw traders write out that Japanese yen trend for 2 years in 2022. We also had the deleveraging here when it started to roll over. Yeah, I mean, I called this bear trap. I said, watch out for that divergence at the bottom. And we had a nice little squeeze up for 1,000 plus pips. It's like, I know there's opportunities, but I just don't care. I don't care that much to follow the Japanese yen that closely. But if you do, trade it on a smaller time frame. Don't fight the flow. Stick to your alignments. It's a great trending currency pair. When it behaves really well. Okay. All right. Sam just confirmed, added a VIP in Waterfall. Perfect, sir. Sam, I just put out an alert today. I know it's only 3 minutes for the close, but I put out an alert today on Waterfall. We'll come back and revisit that on Monday. But thanks for joining, man. Here's Saul says I got 30,000 shares. Well, Saul, if you got a break even at 201, man, I hope it goes up to 202. And then you can close out and get something for it. All right. All right. Yeah, before I go, here we go. Telegram, I'll share my Telegram. So I have a Chris Pulver Telegram right here. This is free for everybody. So I'll click on this, add some peeps. So this is Chris Pulver Trading Telegram. There you go. And then also in my Discord. My Discord is not super complicated. It just allows me to put a lot of content and messages in one place. I know some Discords can be super intimidating because it's threads and subthreads, and this I just put channels. It's like all channels. You want to talk stocks, Forex, options, futures. If I do anything on Twitter and YouTube, the links are there, all my education links. It's just one place that I can put everything. So that's why I have Discord. It's pretty clean. It's not super complicated. So obviously if you want to follow me out there, you can do both. So Telegram, and here's Discord. And then Chris Pulver Trading Discord. There you go. And if you're somehow watching this, I'm hoping that you subscribe to the YouTube channel. We have about 8,200 subscribers now, and hopefully next stop is 10K. That'll be exciting. And I think on that note, happy Friday. Enjoy the rest of your weekend. If you're happening to, I'm just going to be entertained going out to dinner tonight, and hoping to get entertained by the spectacle in Dallas for the big old Tyson Paul fight. Surprisingly, I saw the betting lines today. Tyson is the underdog, which I'm really surprised, but it is what it is. Depends on how much running around Jake Paul does to, I think, evade him the entire time and try to tire him out after like 5, 6, 7 rounds. But we'll see. It's a spectacle. All right. Sounds good, everybody. Thanks for being with me. Okay. Back on Monday. So real quick before I go, I do want to talk about this, and then I've got a private workshop I got to jump into here in just a few minutes. So let me go. Okay, so I do have a bit of a disrupted schedule over the next 2 weeks. I just want to share that really quickly before I officially go for today. It should be business as usual on Monday. Okay, should be business as usual on Monday. But over the next couple weeks, so Tuesday, so we have 16, 17, 18, 19. Tuesday, November 19, through the end of the month, through Thanksgiving, I am basically out. So the 19th through the 29th. Okay, I'm out. So I will still post YouTube videos. So yes to YouTube videos, probably not live sessions. I'll post updates. So I'll do some type of, market update, market minute, something like that, snapshots, something along those lines. Okay. I will still be trading for my services. Now, the daily profit play is probably going to be the one that's most disrupted because I will not be at my computer for normal hours. So daily profit play is going to be either trade on your own. I can talk about this on Monday, but if I have any students that want to step up and run the session, I'm happy to have you all get together. It's a window that I'm gone. I'm going to be in Florida for a week, and I'm going to be in Australia for a week. And so the travel and the time difference, it's going to be limited for me to do anything other than spot checking. So DPP is trade on your own. Obviously, if I post a couple of trades when I can, but it's like next week, literally, I probably won't take a single trade outside of like Monday, maybe Monday or Tuesday before I go to the airport. But Wednesday, Thursday, Friday, I'm out, and then the week after that, I'm 30 hours of travel a week in Australia. I'm going to be 13 or 15 hours ahead. So it's going to be I looked at it like 9 a.m. Eastern time is 1 a.m. Australia time. So I'm not running a live session at 1 a.m. Australia time. Okay. So I'll be gone for about a week and a half. Waterfall, this one should be fine. I can still post alerts. Okay. I'll post alerts, and I'll probably post videos. So look for video updates, right? So I'm just taking a little bit of time. It's not like I want to be gone. I have to be gone, but it's just going to be disruptive of my day-to-day schedule. So look for video updates. You'll all be fine. If you are comfortable trading with me, then wait till I get back. I'll be back the first week of December and off we go. Keep in mind there's also Thanksgiving ahead, so the markets are going to be a little quiet, probably light volume, which isn't a bad thing, but just be mindful of that stuff. Okay? All right. And then for A1 trading, if I find some trades, I'll post that. So if I find stuff, I'll trade it. Okay? So just want to give everyone an update there for that window, 19th through the 29th. I'm out. Florida for a week, Australia for a week, lots of travel. Won't be at the computer all day, every day like I am right now. But once I'm back, I'm back. And other than a baby on the way, then that could be anytime late December, maybe early January, but I'll be around. Okay? All right. So I just want to get that out there. I'll talk about that more on Monday. And I'll see you soon. Have a good weekend. All right. Bye.